Stocks firm up after a soft start with mid-caps leading the charge. Realty and FMCG and financials are the prominent gainers, while IT as well as power drags. RBI issues amendments to the liquidity coverage norms for banks, easing conditions for wholesale deposits, even while tightening conditions for internet and mobile linked deposits and government security valuations. The move is seen easing liquidity for banks. India has imposed a safeguard duty of 12% on imports of flat steel products for 200 days to protect the industry from dumping by China. Industry leaders who had made clamoring for the levy hailed the move. 361 WAM and UBS have decided to partner on wealth management in India, with Indian partner gaining access to UBS's global economic system and buying its India business. UBS will in turn pick up a near 5% stake in their Indian wealth manager. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Today, we did see a bit of a blip that came in the markets at the morning. When you look at it, it went in the red. But now the Nifty has recovered and it is holding on to that green level that we've seen for the Nifty 50 as well. So 0.2% of gain as of now for the Nifty 50, managing to hold on to this 24,100 levels. 53-point uptick is what we're seeing. Nifty Bank up almost 0.7% in today's trading session. Obviously, yesterday also we had seen that banking names were in those gaining side, HDFC Bank, ICICI Bank, and bank today is also continuing to see a good move. Whether you look at PSU banks or the private banks, managing to hold on to good gains in today's trading session as well. Other than that, let's look at the mid and small cap. We're seeing a bit of an outperformance that's coming for the Nifty mid cap as well as the small cap. Nifty mid cap is up almost 1%, like you can see. Small cap also near that percent of gain that we're seeing coming in for the Nifty small cap. 152 points uptick over there. Top sectorial gainer today, we have the Nifty Realty that's managing to do well. So Realty names, whether you look at Anant Raj, that reported its numbers, so keep an eye out on that one. We had Purvankara, we spoke to the management as well in terms of the Q4 update, so that's something to watch out for. Other than that, real estate names like DLF, Brigade, managing to hold on to good gains in today's trading session. Let's look at Nifty IT. We've seen those IT numbers come in. Nothing sort of an excitement that I've seen so far in terms of earnings. So Nifty IT is among the top drags, coming in down 0.3%. We'll have HCL Tech that's going to be reporting its numbers today. So keep an eye out on the IT pack, and anything in sort of a commentary that we see coming in from these companies is going to be key to watch out for. Other than that, some of these other movers in today's trading session, specifically I want to highlight is Eris Life Sciences. That's the one that we should focus on as well. We're seeing some bit of an up move in that one. We're seeing SBFC Finance. That's another one. This is in the last hour of trading session that we're seeing a good up move coming in for these stocks as well. So that is something to focus on as well. And other than that, Domes Industries. That's the one that I'll keep an eye out on. But let's move on and get started with one of the important updates that came in today was 361 WAM. That's gaining in today's trading session, right? And this is coming after the company has announced a strategic collaboration with UBS. Now, as a part of this collaboration, 361 WAM will issue 2.05 crore warrants to UBS, and this is on a preferential basis, around 1,030 rupees per warrant, which amounts to a 4.95% stake. Now, these warrants can be converted into an equal number of equity shares within 18 months from the date of allotment. Earlier today, we also managed to speak to Karan Bhagat of 361 WAM as well as Jin Ye Yong, who is of UBS Global Wealth Management, to understand the strategy behind this collaboration and what is the future potential now comes in for both these companies.
I think most importantly what it gets to us is widening the platform for the client, and that's really what I think comes core to the culture of both UBS and 361, is to serve the clients in the best possible way. As a deep sign of I think collaboration, I think both UBS's investment into the equity warrants in the business, as well as our partnership in terms of, or our collaboration in terms of looking at the Credit Suisse and UBS business folding into our business, should add a lot of value to both our clients.
First of all, we want to bring this word global to the next level. So this transaction basically combines the global and regional reach and capabilities of UBS, combining it with the reach and the capabilities of the local 361 India franchise. And this really, we believe that we are best placed to actually serve our global Indian clients, both domestically and also globally. That the wealth management scene in India is really growing at an exponential rate. And simply put, right, we really want to have a piece of the pie too. As you can see, these three components add together. We are really intertwining together our capabilities and making sure that we are able to serve our clients, global Indian client wealth management, in the most holistic way.
And moving on, the banking index, that is also at a record high level following a sharp rally over the past month that we saw. Now, Ritu is here to tell us what is fueling the banking rally.
Well, there's been a spate of positive developments for the banking system that could explain this rally in banking stocks. And at the heart of this is a regulatory environment that is turning more supportive under Governor Sanjay Malhotra. Now, the central bank has deferred tighter project finance norms and also provided banks more time to comply with these new LCR requirements. And that is signaling to the street a pro-growth and pro-liquidity stance. This shift has also boosted street confidence, and adding to the momentum, systemic liquidity has also flipped into surplus after a 4-month deficit. RBI injected nearly 15.5 lakh crores in the system in recent months, whether that is through OMOs, VRRs and forex swaps as well. Now, while the recent 50 basis point rate cut will weigh on the bank NIMs, it is aimed at squarely boosting credit demand and economic growth, which is also positive. CRISIL also expects credit growth to rise by 200 basis points this fiscal, helped by these tailwinds to about 13 to 14%. Now, the strong show by large banks like HDFC and ICICI Bank in their fourth quarter has also helped boost sentiments to some extent. Now, on the regulatory front, the latest LCR relaxations are a big positive because compared to the earlier proposals, the final norms are more lenient and are expected to improve the aggregate LCR of banks by 600 basis points and free up to 3 lakh crores of lendable resources, potentially lifting overall credit by about 1.5% as per ICRA estimates. Now, RBI has also lowered risk weights on bank lending to NBFCs and MFIs, and that could free up an estimated 40,000 crores of capital, creating 200 basis points of additional lendable capacity as per Macquarie. Co-lending norms, they've also been expanded to include all sectors and regulated entities, and even priority sector norms have been revised, enhancing loan limits and broadening the scope overall for renewable energy and housing credit. So put together, it is a combination of the ample liquidity, regulatory easing and strong earnings that's fueling this banking rally that we're seeing. But that said, keep in mind, not all concerns are off the table. Deposit and credit growth momentum remains a key watch point, and there are still lingering concerns about asset quality issues in unsecured loans as well as the microfinance segment.
Okay, Ritu, thank you so much for that. We'll surely be keeping an eye out on more updates coming in there as well. But moving on to sources, what they are saying, they're telling CNBC-TV18 that the government is now eyeing ways to restrict money laundering through online gaming platforms. Tim C is joining in with us to give us more details on this front. Tim C.
Well, in a bid to ensure that the government is able to break the nexus of money laundering via online gaming platforms, sources have told CNBC-TV18 that the government is likely to consider some serious measures in this regard, which includes to propose mandatory registration of the online gaming platforms with the Financial Intelligence Unit. Sources in the know of the development shared with CNBC-TV18 that interministerial consultations are underway on mandating FIU registration for online gaming platforms, which includes discussions between the PMO, MHA, Revenue Department, MeitY, ED and CBDT, which have favoured for this mandatory FIU registration for the gaming platforms. Sources further say that with this move, the government aims that both onshore and offshore online gaming platforms will be easily scrutinized, and it will help the government to keep a tab on the funding and the source of funding that is coming or going out through these platforms. Sources also claimed that the government, if this proposal goes through, will be able to manage to book offshore gaming companies under PMLA in the case of violations. Meanwhile, an email query sent by CNBC-TV18 to Finance Ministry in this regards remains unanswered. Also, just to remind our viewers that the country's financial intelligence unit operates under the aegis of Revenue Department under the Ministry of Finance and is responsible for collecting, analyzing and disseminating financial intelligence and suspected financial transactions. Now, to be seen is whether the proposal goes through or not and whether this registration actually comes through the light of the day. Back to you.
Okay, Timsy, thank you so much for that. Now, on that note, we're going to slip into a very short break. When we return, we get you a whole host of global updates, including President Trump's latest comments on the Fed chair. Welcome back. Thanks for staying tuned into Business Lunch on CNBC TV18. Now let's move on. And Donald Trump is reported to be studying whether to remove the Federal Reserve Chair, Jerome Powell, and who he says has been too slow to cut rates. The news has jangled nerves on the markets, but does the US president have the power to sack the Fed boss? Take a look at this report.
Donald Trump wants rid of Jerome Powell. He blames the Federal Reserve Chair for being too slow to cut rates, and says his termination cannot come soon enough.
If we had a Fed chairman that understood what he was doing, interest rates would be coming down too.
Trump's advisors say they are studying whether to oust Powell before his term ends next year. But can a US president fire the Fed chief? The short answer is no one seems to know for sure. White House economic advisor Kevin Hassett says Trump's team is studying the question. He suggested there may be new legal analysis on the matter, though it wasn't immediately clear what he was referring to. Powell himself says the president has no power to fire him, and he won't go even if Trump tells him to. The Federal Reserve Act of 1913 says he cannot be dismissed for disagreements over policy. But all eyes are on a case now at the Supreme Court, looking at whether Trump overreached in firing 2 Federal Labor Board members. That could set a precedent for the Fed too, though Powell thinks not.
I don't think that that decision will apply to the Fed, but I don't know. It's a situation that we're monitoring carefully.
Stocks have fallen again as Trump ramps up his standoff with Powell. Investors are concerned that ousting the Fed chief, or even trying to, could undermine the bank's status as an independent, objective decision maker. Traders worry that policymakers could be pushed to cut rates, potentially fueling inflation. Brian Crowes is president of Scharf Investments.
If politics starts getting into monetary policy, you now, as a foreign investor, even a U.S. domestic investor, can't necessarily trust that your interest as a bondholder will be respected. And so that's a potential risk for the dollar and a potential risk for interest rates.
Those fears show up in the foreign exchange markets, with the dollar now at multi-year lows against other currencies. Even if Powell is pushed out, Trump may not get his wish for lower rates. The Fed structure would give remaining board members and regional bank presidents the power to set policy. If they resisted making cuts, Trump would then have to decide if he wants to assault the central bank as a whole. That's a move that would be very unlikely to soothe markets.
On that note, also listen into more reactions to Donald Trump's comments that are coming in. Now, Evercore ISI's vice chairman, Krishna Guha, said that any attempt by Trump to fire Powell would likely trigger a steep sell-off in the U.S. equity markets. Listen in.
It is clearly in the conceivable set. It's something that we have to take seriously, as a risk, and I think a serious risk to markets. I think we're already seeing, like right here and now, in the equity futures, in the dollar, in the bond yields, we're seeing a clear signal from the market that it doesn't like even the idea that the president might try to remove the Fed chair. There's been some loss of confidence in U.S. economic policy making in recent weeks. We've seen that in this very odd combination of upward pressure at times on longer-term bond yields combined with a weaker dollar. That suggests global investors pulling capital out of the U.S. You've seen those inflation expectations well behave well anchored. And that's what will eventually allow the Fed to be able to cut rates when we get to the point that unemployment has increased materially. But if you start to raise questions about Federal Reserve independence, you are raising the bar for the Federal Reserve to cut. If you actually did try to remove the Federal Reserve chairman, I think you would see a severe reaction in markets with yields higher, dollars lower, and equity selling off. I can't believe that that's what the administration is trying to achieve.
Also, Roger Ferguson, former Federal Reserve Vice Chairman, also warns that attacks on Fed's independence and trade policies may harm U.S. market stability. Listen in.
Obviously, as with most people who have been following the independent central bank for years, I do not think these attacks should be happening. You just played a piece from my friend Austin Goolsbee, the president of the Chicago Fed. I agree with him wholeheartedly. It is unwise to call into question the independence of the Federal Reserve System, as it is to call into question the independence of any central bank. We've learned that credibility at the central bank is critical to exercising monetary policy and to creating, trust and confidence in the U.S. economy. We've already seen, international investors call into question, perhaps, the stability and reserve currency nature of the dollar. It is unusual to have equity markets down and the dollar go down as well. Normally, when equity markets are down, individuals look for dollars in order to buy, the fixed income, the riskless asset that the U.S. offers in terms of our treasuries. There's been less of that of late.
And the latest CNBC All America Economic Survey shows that a majority of respondents view President Trump's sweeping tariff policies as damaging. CNBC's Steve Leisman breaks this down for us.
A plurality of Americans think across-the-board tariffs are a bad idea, with most believing they'll hurt jobs and be worse for inflation. And the public is having a hard time believing there's a payoff at the end of the process. The CNBC All-America Economic Survey finds 49% of respondents say across-the-board tariffs are a bad idea, with 45% feeling strongly about it. 35% support them, and 15% are undecided. So there is some scope for the president to gain some support. Among those most negative on tariffs are Democrats, African Americans, 18 to 34-year-olds, and those Americans living in the urban environment. Most positive include Republicans, rural dwellers, those with income above $100,000, and men 50 and older. Majorities think tariffs hurt importers, the cost of everyday goods, the overall economy, and workers. But by 51 to 37%, Americans say they'll help companies producing in the U.S. Americans have also not embraced the president's concern about our allies representing an economic threat to the U.S. Mexico, Japan, Canada, the EU, and the U.K. are all overwhelmingly seen by the public as more of an economic opportunity than an economic threat. Only China is seen by Americans as more of a threat, but by a modest 44 to 35% margin. It remains to be seen whether it matters if President Trump is out of step with the broad public on tariffs and trade. The president's base backs him on tariffs, believing his policy will yield results over time. But their tariff support is 20 points below his overall support. Democrats overwhelmingly disapprove of tariffs, as do independents, by a 2-to-1 margin. Steve Leisman, CNBC Business News.
Okay, on that note, we're going to slip into a very short break. But as we slip into the break, here's some good news coming in for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or scan the QR code on your screens. Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. I just want to mark the flashes at the bottom of your screen. Sources are telling our sister channel, that CNBC Awaaz, that government is looking to relax norms for AC and fridge companies. Relaxation of BIS norms possible on import of AC compressors. Now, this BIS norms also, there's going to be a relaxation for AC compressors with capacity which is going to be of less than 2 tons. Now, on the back of that, we've seen all these stocks that are buzzing in trade, the AC stocks, Blue Star, Havells, Voltas, all of them have seen a spike up coming in the trading session as of now. So yes, something to watch out for and where that's going to be headed as well. But let's move on, and we have more updates that are coming in from the visit that is of US Vice President J.D. Vance on his family. And what is the latest update coming in from Jaipur? Vance and his family visited the Amer Fort and are expected to visit Hawa Mahal before addressing a gathering at 3 p.m. today. Parikshit is joining in with us from Jaipur for more details on this one.
After completing the Delhi leg of his India visit, US Vice President J.D. Vance and his family arrived in Jaipur. They're staying at the famous Rambagh Palace and they visited the Amer Fort a short while back. You could see their pictures touring the fort and they were welcomed in a traditional Rajasthani way with elephants and Rajasthani folk dancers at the Amer Fort. The big headline coming out of the Vance visit so far is on the trade front, with both J.D. Vance and Narendra Modi announcing the finalization of terms of reference for the bilateral trade agreement. According to USTR Jamieson Greer, this sets the roadmap for the negotiations and sets the road for a positive, mutually beneficial trade agreement between India and US. However, he said there is a serious lack of reciprocity in trade on the Indian side. He said that US companies face not just tariff and non-tariff barriers, but also lack of market access. There are issues related to standards and regulations in the agriculture sector, and all of that needs to be addressed in a holistic manner. He also said that there is a $45 billion trade deficit that needs to be reduced. The average applied tariff of US is only 3.3%, whereas the average applied tariff of India is as high as 17%. All of that needs to be brought down, and there needs to be parity in the trading relationship and an equal level playing field for American companies. He also said that there is a need for US to secure some long-term benefits, which could imply US is looking for long-term energy contracts and defense contracts as well. So while the Vance visit is a pivotal one, an important one in the ongoing trade negotiations, the two sides are yet to resolve some of the outstanding issues such as agriculture and dairy and market access issues.
Thank you so much for that, Parikshit. But let's move on. And Prime Minister Narendra Modi has departed for Saudi Arabia, where he will discuss trade, investments, energy and defense cooperation with the Saudi delegation. The two countries are expected to finalize several agreements to bolster cooperation. PM Modi and the Saudi Crown Prince Mohammed bin Salman are also going to co-chair the bilateral Strategic Partnership Council meeting. Modi will be the first Indian Prime Minister to visit Saudi Arabia in the last 40 years. And tributes are poured in from across the world to mark Pope Francis' death. India has declared a 3-day state mourning as a of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, we have Midcap Radar.
How do you create a moat around yourself? How are you different?
So I remember in 2002 or 3, I opened my Demat account.
Huh.
And the person did not even kind of entertain me. So I was in chappal, and as a student you go there and so kala come to and so on, and then after conviction, after some convincing, fill the form, 2 days, 3 days, and open my account. By the time you're gone, your interest is lost.
Yeah.
So the point was you find one problem area at a time and then kind of figure out that you have this right to win in this market.
What your data is telling you at this point in time about the investing culture?
Mutual fund used to be very low, by the way, in low single digits. And now it is at high single digits. Stocks used to be high single digit and it's slightly higher single digit.
Yeah.
Indian middle class, very large, and we are at around the 70-80 million mark.
What are the top 3 things that you will never do?
We will not do e-commerce, unregulated products. We will not do anything which is not good for the customer.